Alright, guys. Welcome to Forex Street Academy. First of all, I want to say thank you for subscribing to our channel. But if you haven't, please subscribe to our channels and also hit the bell icon in order to get notified whenever something new is uploaded. First, I want to talk about the Forex market participants. First of all, is government. The government uses the forex market to meet certain economic goals, whether it is to have low exchange rate compared to a certain currency or high exchange rate. It all depends on where the country is importing or exporting the goods from, and many other factors. Also, the central banks, which is the central bank. In most cases, the central bank is the financial arm of the government. But sometimes the central banks make independent for some countries. The central bank uses the forex market to move around its reserve of currencies and monitoring situation and things like inflation and so on. Yeah, so next is normal banks, which is what you're seeing here. Normal banks trade on forex markets to define which exchange rate should govern the exchange of currencies. And those days, you and I will go to the bank, and then we do exchange there with or do some transactions of many skills compared to what the banks had in international levels. So they threw around billions, if not trillions of dollars just to make sure that they have the right currencies that they need for their activities. Also, other banks, other institutions participate in the forex market, and the example of that would be the pension fund in the US. Yes, so the pension fund in the US they have massive companies who have lots and lots of money, and then who have lots of money, and sometimes they need to make transactions on the forex market as well. Yes. So also we have normal companies like BMW, Coca-Cola, Jerry Motors, and any other multinational companies you can think of. These companies have operations across the globe, and therefore they are forced to convert currencies in overtimes in order to pay suppliers, and employees and so on. For example, Coca-Cola might be paying some employees they have somewhere in India. They just have to convert dollar into rupees and just to pay the employees. And for instance, BMW might be ordering some parts from Japan, and that's where they have to convert euro into yen and then pay for those parts. So these are some of the transactions that are done. And another good example is when BMW might order parts from Japan and kept them, but only have to pay for them in 1 year. In that situation, they have two options. They say they can either pay pay for the product, or pay the product seller and then 1 year later they pay for the parts, but then they will have to convert euro into yen 1 year later, and price of yen might have gone up by then. um, that will mean that BMW will lose on this foreign exchange transaction, and this loss will eat into the profit from the normal operations. Yes. So those cases, most companies will do something which is called hedge. What they do is they instead of waiting 1 year to convert their euro into yen, they will actually create a forward contract. It's a forward contract with the bank saying that they would need yen in 1 year, and then they will create or agree on a fixed price. Now with that bank, but to buy those yen in 1 year from now. That activity is called hedging. Yes, it's called hedging. And therefore, these companies are referred to as hedgers. Yes, they are referred to as hedgers. Why are they referred to as hedgers? Because they are hedging themselves. Now, there are instances where they don't need to buy other currencies immediately, but when they would need it later on. So they are called hedges because they are hedging themselves, as I've said before now, and protecting themselves from this foreign exchange risk. Have you seen that? Protecting themselves from this foreign exchange risk. Actually, a lot of companies across the globe undertake these activities. Yes, yes. So another, which is the next, is called hedge funds. Hedge funds are organizations that is designed to speculate on the forex market and bring profit to their investors. Yes, and bring profit to their investors and so on. Yeah. Also want to talk about normal traders like you and I and George Soros, who was able to make 2 billion US dollars in 2 months. 2 billion US dollars in 2 months. So that's it. And also, when you talk about when you talk about how much that goes into the forex market, some persons have asked, hey, boss, how much do you think goes into the forex market? So I was just like, oh, sometimes some persons they say it's 3 trillion US dollars, some persons say 4 trillion US dollars, but we were saying 5 trillion US dollars. That's the day trade volume, the amount of money that runs through the internet on daily basis. So I want to say, please, in order to get notified whenever something new comes up, try and just hit on the subscribe button and that of the bell icon. I am Toby again from Forest Street Academy. Thank you.